War is escalating in the Middle East, oil is rising, and the big question on every investor's mind right now, is it time to sell everything? We tackle this million-dollar question, and with our signature playbook giving you a glimpse into our government-accredited share trading and investment education. Plus get ready to see our hand-picked ASX stocks that are setting up for massive returns next. I'm Dale Gillam, joined by senior analyst Janine Cox and Philip Tortevsky. And we are Wealth Within. Good evening, team. How are we? I'll go to Phil first.
All right, nice, yeah.
Hey.
Good, yeah.
I haven't been on with Janine for ages.
I know, it's been fantastic to see you. You've come all the way by train.
I did the planes, trains and everything, like the V-line, and it's not working. And it took me 2.5 hours to get here.
Jeepers.
So that's better be a good show. Cool. Well, anyway, let's dive straight into it. With peace talks breaking down between the US and Iran and threats to block the Strait of Hormuz, is it finally time to think about selling your shares? Now, Janine, I know there's lots of conflict around occasionally between you and me, but let's put that aside. Let's talk about another one.
Okay. This one's probably more important for the world than our conflicts. Look, in terms of thinking through this, it's quite difficult for a lot of investors who are running blind at the moment. And there's a lot of people who are fearful right now. And their whole focus is on the fuel situation and the war. And they're not so much thinking about their super, but they should be, as well as their investments, and thinking what's the plan for that, and to have a clear plan. Because if you have a clear plan, then you will not be worried about it. It's just a matter of whatever the shares do in the meantime, then you just manage it according to the plan. But some of the shares could actually rise with all of the speculation, I guess, that's going on at the moment. So even though we see some stocks fall, they could turn around and just as easily go back up again.
Are people overcomplicating things at the moment?
I don't think they're overcomplicating it. I think that there's a lot of people coming from the point of not knowing, and that's probably a bigger concern right now.
Okay, well, are there any particular areas or drivers or areas that are driving investors, or what they should be focusing on right now to gauge the next step for the markets amidst this war? And if it does escalate too, I mean, obviously one minute Trump's swinging left, the next minute he's swinging right, and it's like, yeah, he's a swinger in my book. Yes, I'm closing the strait. No, it's open again. Yeah,
it's pretty crazy. And I mean, I think the biggest marker that has been driving most decisions right now is where oil is going. The direction of oil is the thing to focus on more than anything else, I think, right now. And to that point, I actually want to bring up the chart, if that's all right, of oil.
Go for your life.
Yes.
I don't control the mice.
Yes, and just give, I guess, some insight in terms of, because it truly is with certain sectors providing, real challenges. And one of those, what I've got overlaid here is the information technology sector, which is in the green, and I've got the oil chart, which is the oil futures in the blue, and you can clearly see oil going through this huge bear market from 2008 down to 2020 was the time where the tech sector really had strong gains. And then we're seeing this inverse relationship between oil and tech. Most recently, we saw as the tech sector came off, was the same time where oil started peaking. So right now, what makes this scenario so interesting, and we're going to dive into a few sectors that we think, are presenting really, really well on the chart. But just focusing on that oil price and why it's so crucial right now is because if we purely look at where it's sitting, we're sitting at crisis prices, which are around $110 to $120. Now, what's interesting is as war has escalated, we've not seen a really strong uptick past that level in oil. So right now we're sitting in this dynamic where there's a lot of oversold stocks that have these inverse correlations with oil, and we're seeing oil potentially being at peak prices, not going any higher. So this is potentially lining up a ton of those big reversal type opportunities for stocks on our market if you take away the fear and the noise. And that's why, I mean, so many people have been saying, oil, buy oil. But we've been saying on this show, well, hang on a second, let's look at where it is right now. And when you look at it today, I don't think the oil play right now is showing any significant further upside unless something drastically changes in the world with the war situation. So be careful with that oil play and check out some of the sectors and stocks we're about to show you, because they may be setting up very well.
So reading between all of that, you're saying oil searching for a high right now.
It's very much the case. I mean, we go 2011 to 2014, just back on that chart. You know, that was during tension, global geopolitical tension. We saw in 2022, which was the Russia-Ukraine scenario again. And each of those times, it peaks at 110 to 120. So I don't know what's going to be majorly different. I mean, unless China now gets involved and we go into full-blown war potentially. But we've got to play with what the market is telling us, and there is real selling, keeping this price at 100 or under. So be very careful on those long story oil plays, and yeah, you're going to find some interesting setups soon.
Well, often that's the case anyway. Most of the investors get in at the last bit of the run.
We saw it with gold too.
We saw it, yeah. We've seen it with lots of different, whether it's stocks or commodities. We've seen that a lot of times. And somebody was asking me about this yesterday. You know, can oil go to 160 or 180 a barrel? And I said, well, it's possible, but it's unlikely because simply as things get more expensive, people stop using it. And you can't tell me the Arab countries don't want to sell oil. They just want to sell it. And, you know, so to me, something will happen and it'll work out, but they don't want us to change to EVs too fast because it'll affect their supply going forward in the years' time anyway. So I'm agreeing with you. I don't think it's going to go much higher.
And I think just the point on oil also, because there's all this talk about oil being scarce, oil being, you know, but it is not. After water, it's the most abundant thing we've got. And so just be mindful of that because it's been in a 10, 15-year bear market for a reason.
Yeah. And we've got, I mean, Australia got 40 years of supply of oil underground, so we haven't even mined that yet. So it's just about whether we actually start mining it.
And keep it here.
That's another. Anyway, well, no doubt the market has been shaken up over the last couple of weeks, but has this now created a serious technical opportunity in some sectors? Now, to bring you up to date with all the different sectors, we've got our resident sector expert, Janine.
Thank you very much. Yes, it's a really good time to have a bit of a macro look, isn't it?
Well, it is, and that's the thing is, and that's what I was saying earlier, is people, I was presenting in New Zealand and I was talking to somebody the other day who was looking at doing our course, and they were the wife of a friend of mine, and she started chatting to me about stuff, you know, about the war and all those things, and I said, put your hand in front of your face. She goes, what do you mean? I said, just put your hand in front of your face, like touch your nose. And what are you saying? She goes, my hand. I said, yeah, you're not seeing everything. So when you look at the macro view, which we're talking about, the sectors, you actually start to see actually what's happening, not what we think is happening or what we perceived is happening. And often that's how a lot of people look at the marketplace, is they're looking at, you know, Trump and oil and they're focusing on that, whereas where's the bet speed chart to look at? That's what Janine's going to share with you right now, aren't you?
Great point, great points. All right, let's have a look at the first one. This is the ASX 200 industrials, or the S&P would be probably pretty upset if I didn't say S&P ASX, wouldn't they?
Yeah,
I guess so.
Okay, 200 industrials. We've seen a nice healthy pullback, I would say, at this point, which there's nothing too concerning here right now. And, you know, if we're expecting the market to make another move up out of this, and people are sort of wondering, well, how's that possible given the situation around? But it's exactly as Dale's saying, you've got to let the charts tell you the story, not the news. So here's a 13% pullback. That is a healthy pullback on this index. If we look at what the index had done all the way up to this peak prior to COVID, this is the sort of typical pullback that you would see. And again, the same sort of thing, each time it pulled back, you know, so it's to be expected that we would see this sort of a decline. The only time that I would be really concerned about it, if it's taken out this prior low on that monthly chart and a big strong down move, to think that that's actually broken the angle of that trend. And this is where people underestimate the benefit of these trend lines, trying to use moving averages to weave in and out of these moves when it really doesn't tell you the best story, and you're just looking at the trend, and that can be a really simple thing for anyone to use to work out how to protect themselves.
Well, you tend to, using moving averages, you tend to overtrade. You know, and in all my research, I found that with using them, you might be able to get in around the same time as when, you know, I might get in or we might get in, but you're in and out of everything a lot more. You have a lot more trades and you make a lot less money, which is really what you're saying too. But I want to ask you, before you bring up the next one or you finish some comments on this one, is obviously every year we have a yearly high and a yearly low, always. And then we have a half yearly high and a half yearly low. Generally, the yearly low, we sort of see them around March, April, don't we? So are we doing that right now, and are we looking at a bullish run?
Yeah, often
Putting you on the spot, aren't I?
Yeah, often you do get that bullish run and then you get another pullback into around the middle of the year, and then institutions reset their positions at the start of the financial year and off we go again. Then we get another pullback, usually December, January. So, yeah, it's cyclical. It's the way the market's working.
Okay, well, let's bring up the next one. Which one's the next
All right, next one. All right, you can see there you've got a really good bird's eye view of what's going on in the S&P ASX 200 consumer discretionary. Now, this to me is one of the interesting areas of the market, because when the GFC hit, and we look back prior to the GFC, this area of the market fell early, came early into the pullback. We're now seeing what I would say, again, is not anything too concerning, even though the degree is higher than what the last index was that we saw. It's just come back to the angle of that overall trend. And until it tells us that that trend has been broken in some major way, which we saw here during COVID, we saw a warning here in 2018, and then it went back and then took it out. So at this stage, we don't have a significant warning yet, and that's what we're waiting to see, because the overall trend is still intact. So at the moment, is this going to have a little bit of a rebound? Might just go sideways for a little while, but this is an area where there could be some opportunities if you trawl through that sector. I'm not suggesting that that everything is going to go up, but I think that if you're selective, and that's where having a good set of rules and working out how to understand when the trend is changed and what your risk is, in taking one particular set of rules over another, that all plays into it, doesn't it?
Yeah, well, it does. And I mean, consumer discretionary, you would think, given the economic conditions we've had the last 3-4 years, maybe or even since COVID, whilst we technically haven't been in a recession, really, it's been a recessionary environment, hasn't it? It's just that the government keeps employing people to keep unemployment low. That's why we don't have a recession. So this should be spelling opportunity, because this sector's down nearly 30% over a period of time. So therefore, what stocks opportunities there?
Yeah, I think you've nailed it. Even both of these sectors that we're looking at, the charts, what's important, and both of you, are well aware of this, when you look at a chart, there are moments where a stock looks good, looks okay. Then there are moments where it looks amazing in terms of approaching key levels. Like when we look at what's happening now, these sectors are at key levels, and that doesn't happen all the time. No. And so when these moments unfold, I think this is the time everyone should be looking at the chart, because we're talking about a sector that is going back to prices from December 2023, and looking at the nature of any stock or index, the way it unfolds, it moves in waves. So you're given potentially an opportunity that you're not going to get again for the next 5 years. And that's why I think now is such an exciting and important time, because we are seeing prices at key levels if you know what to look for. I mean, I've had so many discussions, as you know, doing mentoring recently, and one of the big things that's come out, it's people looking at charts and going, yeah, I like it here, or I like the stock, I like the fundamentals, or I like the story. But then we always go back to, but is now the right time to buy?
I know, I am frustrated as all at the moment, because I'm wanting to buy, but it's like the best traders are patient, and I have to be patient right now, because everything's giving me great signals saying this could be finding support. It should start going up, but I'm just waiting for the trigger to get into it, and it's like I'm sitting there going, I want to buy, but just sitting back and waiting. So that's what you're talking about.
But that's the thing, the patience to identify those key moments, and get in at those key moments, because if all you ever did was operate, through that, I mean, you'd be awesome in terms of gaining the results. So, I think we're in a really interesting time right now.
All right, well, if you are interested in the stock market, and right now that you're a bit confused about what to do, maybe you consider getting a copy of my first book, How to Beat the Managed Funds by 20%. It's still free. You just got to pay the shipping. You just go to our website, wealthwithin.com.au, or click the link below in the description. But again, it will give you the strategies. It'll give you a whole different outlook on how to look at the market right now. And as Janine said earlier, a lot of people are uncertain about the market. This will change everything for you. So click the link below and grab your not coffee, maybe grab a coffee while you read it. But next index is next sector that we're going to be looking at is...
Yeah, this one is probably the most interesting one, I'd say. It's the tech sector, and it's the one that's had the biggest drop. Now, in terms of what we were saying before, this is a 50% fall. This is huge opportunity in our book in terms of where people could go with this. Now, we're not talking about long-term positions here necessarily. At this point, it's more about trading opportunities coming into it, which is why you need to polish up your knowledge and make sure that you actually understand how can you actually get something out of this sector and which are the best stocks to do that, and not just looking at the fundamentals, but having an understanding of the charts is key. But again, this has just come back down to that the line of that trend, which is so nice to see. So when we see this sort of action, okay, we're thinking, okay, this could be the top, right, for the sector in terms of where our bigger picture cycle is. It's a possibility. We can't rule it out altogether. We've got to look at, both sides of the coin whenever we're looking at this. But in terms of the upside potential from where it is right now, and this is why you don't want to be holding on to these stocks through here, but there's a 60% upside potential for the sector, and that's achievable to that point if we get a nice bounce off the angle of this line and then it starts to take off again. Where I would get concerned is where it's made this low, it's making this test right now, but if it keeps just trundling south, then my prognosis for the sector may change slightly.
I want to get both of your opinions on this. Obviously, the tech sector in Australia is a small sector, a couple of percent of the total value of our market, whereas in the US it's huge. But in the US it's quite a volatile sector, and seems to be more recent years ours has become more volatile from that. Is that something that people should be expecting now with our sector, that tech stocks are going to be more volatile? I'll get yours first, Janine.
I don't think that people should worry about that necessarily, because if you have if you can get a trend line on some of these, stocks that are in this sector, if you can get a good set of rules to be able to trade this up, I don't think it matters whether it's becoming a bit more volatile, because we know that any stock at different parts of the cycle is going to become more volatile. Just go back and look at NAB. It's a bank. You could say that about any stock, couldn't you?
Well, you can, but some are more volatile and some put you to sleep, don't they? Really. What's your opinion, Phil?
Yeah, I also, what Janine said was, I'd second that, but I'd also say if we go to the chart, what's important to me is, look, on one hand, volatility is your friend, right? You want volatility to gain growth, but it's where you interact with the market in terms of whether or not that volatility is a good thing or not. And what's often common, and we've shown time and time again on this show, most traders or I guess investors that are following news and I guess commentary mainstream are getting involved after the stock's in significant runs on the upside. And so when the volatility starts to pick up around these big turning points, you often see that it affects the people getting involved on those FOMO type trades, which is often near the top. But when we look at this particular sector and what we outlined in terms of oil is potentially at peak prices, there is a very serious reason or an argument for tech being at peak on the flip side prices on the way down. There's reasons for it to find support here and rise. And you tie those two extremes together, and if we do see a bit of a reversal, these are the moments where volatility will be your friend if you get your timing right. And it's going to be your best friend. And so I think that's, I guess, where people should be looking at it in terms of get my timing right and avoid the issue with the volatility, because it's, like I said, you try and chase a stock 30, 40, 50, 60, 70% up and you place a tight stop and then you complain, oh, volatility, but the market's getting ready to, dip on the way down. You're at the end of the trend. And I think that's the crucial distinction to make with all this stuff.
Wise words from our experts here, and I do have to agree with you. But when you got stocks like Appen hugely
that's flying
down,
at the moment,
and it's starting to find some support, and Life 360, another one, hugely down, but looking like it might be finding support. And there are plenty of others that I could name. To me, that puts a big smile on my face. And again, that's why I'm sitting here being patient and pretending it doesn't affect me. we got one more sector, haven't we, to go through?
We do. It's communication services. So this one's been a little bit odd in terms of looking at how the other sectors have formed and the trends, I would say. Not as nice in terms of the trends, but I mean, Telstra's obviously had a significant influence on this one. I'm looking at this and thinking this could just as easily repeat the same thing that it's been doing. Over time, we could see it crack back through that 2,000 mark and take out that high at some point. If it goes below this low here in March, then I would just wait a bit longer to see whether that angle of that trend continues to hold. But again, same sort of thing, and people are looking for all sorts of bits of juicy information that they might be reading in articles online, when really what they should be doing is looking at these charts and then learning how to understand and interpret them.
It's interesting, that chart used to just look like Telstra, didn't it? But it's not. Like, Telstra's booming at the moment, doing really, really well. So, and I love the look of Telstra at the moment. But this doesn't look quite the same, does it, anymore? So obviously some of those other stocks within that communication sector are actually doing quite well.
Yeah,
exactly.
So
we've got one to get into for sure.
We have.
Yes.
I know later, I'm getting excited because later we're actually going to talk about Bitcoin and where we think it's going to go. So stick around, because shortly we're actually going to give you some stocks from those sectors that were just mentioned by Janine and Phil, and they're looking primed for a strong upside next. But now's the time for the trending topic for this week, and the lovely Janine's back to give us your trending topic.
Yes, thank you, Dale. Well, when significant players in construction fall, we need to stop and listen. The shock waves will impact our entire market, and there's a growing crisis in Australia's construction industry. Rising fuel costs and higher interest rates are significant contributors, and tradies know what happens when the cycle turns. The construction industry employs 10% of Australia's workforce, and then there are all the industries underneath that support it, including the construction materials sector. So we all need to be prepared for what's coming. It's not just about protecting your income, it's also how do you protect your investments when the cycle turns. And construction insolvencies have been rising. This data is from the Australian Securities Investments Commission and shows how significant the situation is in the sector. Over the past 5 years, there have been more than 10,000 insolvencies, and there's one insolvency case that's actually grabbed the headlines more recently. That's Danny Isaac's company, Descon Group, and it was reported that the company's rescue package has been blocked as liquidators probe a $230 million debt. The group was reported to have hundreds of millions in project value and contracts across Australia at its peak before it collapsed. Now, this could happen to any company, even listed stocks. So let's take a look at two stocks that you ought to keep an eye on. Now, of course, Dale, this is going to, when the construction industry does eventually topple over, and we see that every cycle, that it's the material stocks underneath that as well that are obviously cop a big blow.
Well, they've got to supply all the raw materials, don't they, to create the steel and
so it's not just building, it's all the suppliers underneath all of that. And so we ought to keep an eye on some of those charts. And so I picked out a couple of interesting stocks that have been booming more recently, that have taken a bit of a breather. And just keeping this in the whole concept of what we were talking about before and looking at, if we can see that the angle of the trend is up strongly like it is right now, we've seen a nice healthy pullback so far.
This is Monadelphous.
This is Monadelphous. Now, thanks for that. I know what it is.
I know you do, but some of our viewers are going, what the hell are you talking about today?
Monadelphous Group is a diversified services company operating in the resources, energy and infrastructure industry sector. Monadelphous has two operating divisions working predominantly in Australia with overseas operations and offices in China, Mongolia, Papua New Guinea, Vietnam and Philippines. Now, you think even if a company's diversified, and there's been all that conversation about if companies are diversified, there's no issue. But we all know that when the stock markets around the world correct, they're all doing it at roughly the same time anyway.
It doesn't matter how diversified it is, it's our perception. If we think the company's not that great, we're all selling it.
That's right, and it becomes more a question of how well can you get a set of rules that allows you to have a decent exit, and how stable are these sorts of stocks. And we can see here that there is a certain amount of volatility in Monadelphous that allows for good trading opportunities as it's obviously unfolded. This one was obviously an amazing one that you can see unfolded and went through that prior all-time high. But, stocks will get to a point, like Phil said, where, they're trending up and eventually they become, they're already at their peaks, or that they may be at their peaks. So we're seeing that there's a little gap here on the chart. We can see how the stock has accelerated from the trend and it's trying to come back to it. We could even see it touch that line again before we know whether it's going to go up straight away. But I think there could be some good opportunities still in these stocks. However, it's more about approaching this with caution, and it's the timing of your trade now that has to be seriously considered.
It's just not picking any stock.
That's right.
It's about picking the right time to get into the right stock.
Yeah, but a lot of these, as we're looking at some of the construction stocks, think about Lend-Lease. That had been tracking down for so long. It's not really one that I would use to determine what's going to happen across the market or sector. We've seen the REITs all pull back. That's one that's really a good place to keep an eye on.
James Hardie.
But we know that material stocks have been the ones that ran hardest for the longest. So if we're keeping an eye on stocks that are more exposed to this broader area of, maybe energy and infrastructure and the civil sector, Sol Leslake came out and he's very concerned about the state of play in the civil construction area. And when you start to see, economists who have been really well respected like him, talking about this, then it's not a matter of panicking. It's a matter of just paying attention and just watching what's happening in the space.
Well, with that space, it's not like building a house where you can go down the street and look at a display home and go to a volume builder and say, build me a house, and it's built in 6 to 9 months-ish. It's not like that in that civil sector. It can take years to get projects out of the ground and years to build them too. And obviously that we need to look at that sort of stuff. And if that's slowing down, then there's that, what's the chain effect from there, going right back to the raw materials, that's really what you're saying, isn't it? Yeah,
and we've got to factor in the fuel situation as well. So 75 to 80% of the fuel costs in that civil space comes from diesel. The use of diesel, it's been said. So, if diesel has such a huge impact and it's gone up so much, then imagine what their costs are doing as well. The labour costs are going up, the fuel costs are going up, we're getting interest rate rises going up. At some point, some projects are not viable anymore. So, there's that balancing act. We've got to be thinking about it. And if you're employed in the industry, you really need to be aware that you've got to have multiple streams of income. Don't just rely, you might be getting serious six-figure salary in the industry, but that can all run out pretty quickly when the whole market changes or the economy changes. So it's about being prepared for that.
Thank you for saying that, because that's perfect. I've been saying that for so long for people. You can't rely on your job anymore. Things can change, and especially with AI and everything else. So that's such an important thing to say, is have multiple streams of income, because if you don't have security, and if you don't have that. So thank you for saying that. So you've got another stock. You said two, so that was one. That was Monadelphous.
Yeah, just quickly, because some stocks will run at the same time. So this is where it may be interesting to look at some of these types of stocks in the space and see, well, we just saw Monadelphous to have that big run, but we've also seen NW Holdings have a big run as well, go through that all-time high. It looks fairly similar overall in terms of what it's done, maybe not as fast, but this could be a good opportunity to have a look and see, well, okay, what's this one doing, and what does this mean for that space as well? Because it's checking in to see it's gone away from the angle of the trend, so there's going to be a reckoning at some point. It's got to come back, and the further it goes away from the angle of that trend, the more likely it is, to swing back hard, which is what we've seen. So now it's just the market's reassessing it and saying, well, can we see further upside, factoring all of that in? But there could be further upside in it. If it takes out this low here at around 510, just sit and wait.
Okay, really good advice. Now, if you do want the skills to analyse stocks, just like you've been seeing tonight with Janine and Fella, visit our website, wealthwithin.com.au, and click on the education tab. But let's now get back into our topic and get into some more stocks. Now I'm going to throw it to you, Phil, to give Jeanette a bit of a break.
All right, let's go. Now we're going to pick up some stocks in those sectors we mentioned earlier. Now the first one is Orica. Obviously Orica is if we compare it to the sectors we had them in there, industrial play. Now Orica provides all the supplies, if you will, to the materials sector. Now that we know the materials sector is absolutely flying at the moment. But what's interesting about Orica, for me, it's starting to change it's starting to change character and dynamic. And I show that by that big momentum line we had on the way down. This was a stock that was trending down for a very long time. It was very evident that there was a base for Orica for well over 20 years almost, around $13. We've recently come and tested it, bounced up, and the real test was how it would perform for me around this $20 mark. And we've seen it blow through, straight through $20, pull back literally on $20 right now, and on the flip side of this momentum. So I'm looking at Orica as a I guess, expansion story right now, but the key is it has to hold $20 because we have seen a bit of a pullback. This is going to be key. If we hold this $20 level, especially as we've walked into where the significant buying happened. So I think this is another one when we're talking about make or break, key moments, you're coming off a healthy pullback, probably a perfect opportunity coming on the horizon. It's not one of the late chase FOMO ones. And definitely if we are truly in expansion and the materials sector has another few years in it, we could see a big run past $26 to $28. But again, that word confirmation, which if you're not trading with it, you're trading blind. So not quite yet, but definitely get ready for Orica.
You know what I'm saying? You're probably too young to have seen it. Janine's barely probably yet old enough to have seen it. Remember back in the Asia crisis and the tech boom, we saw that in the late 1990s, early 2000s, that tech boom, and everybody goes, those old boring stocks like your banks and your materials and all that, forget about them, go into these new stuff. But are we seeing a bit of that at the moment where people are looking at some of these more lower end stocks, the more sexy, techie type stocks, that sort of stuff, and not looking at some of the stocks like this, which may be providing the best opportunities? What do you think, Janine? She's looking at me stunned.
I think last year was all about going into those type of low-end stocks, and I think the mood has changed a little bit.
That's what I was sort of getting at. I'm just seeing that on the charts. I was wondering if you were seeing that as well.
Yes.
Yeah, so going for some of these old favourites, I suppose, if I'm allowed to say that, rather than some of the new sexy stuff.
I mean, even chatting yesterday with Pedro on our Monday show was a good conversation in that now Australia, I think, sits second or third in terms of superannuation pool in the world. And so all that money's got to get allocated, and it's definitely not being allocated in the speaky end.
No.
So that's why we're seeing a huge uptick in a lot of the big end stocks, top 50, top 100, which is really interesting right now. If that continues, that might be the area that shines.
I think the market's looking exciting. So the next stock is for you, Janine.
Yeah, which is interesting because that sort of drove our market to the top.
Yeah.
And in the end, do you remember the banks and the big materials ones? Let's have a look at this one. Dicker Data. Yeah, look, that's an interesting one indeed. It's such a strong level that we've seen across here at around that $8 mark. But it's quite interesting. This is one that really tests your patience in terms of trying to eke the best opportunity out of it. I mean, here it actually looked like it was going to take off again and then turn and reversed and came back and has created this really nice angle all the way to meeting a point. And this is probably a classic thing to talk to people about when they're learning to trade the stock market, as in bringing them the price into that equilibrium point where, you know, and then all of a sudden you get the disequilibrium and it breaks out again. It's interesting, isn't it?
Oh, you love how they set themselves up. I mean, you know, people are worried about volatility, but people like us we're excited about it, you know, and waiting for that breakout of that disequilibrium. And then, you know, when you get equilibrium, the stock's going sideways, people get bored and you go, yeah, but just wait. You know, and that's the patience we talked about earlier. So, you know, to me at the moment, Dicker Data's in an exciting area, obviously, you know, in supplying IT gear, basically, your computers and everything else.
Which is a good gauge because it's in that consumer discretionary area, and it can really help you because what do people buy most more than anything, right? It's tech, it's phones, it's laptops, it's all that kind of stuff.
Yeah, well, they're getting them, you know, they're the wholesaler basically for a lot of these, you know, all the big brands like your HPs and all that sort of stuff. So your local computer shop would be getting all their supplies from Dicker Data, you know, so if you see that stock moving, that means people are buying stuff.
Yeah.
Really, so I like that. So what's the next stock, Phil?
Next up, we have, I believe, Technology One. Now, this is another really interesting stock. It's one of the, I guess, big tech plays that we do have, even though our market is small, and it has come off a really significant correction. But only rebalancing, you know, it's so interesting. You see time and time again, stocks, they can get, as we mentioned, you know, sustainable and unsustainable, but when they move back to that really sustainable rate of rise, which is on this momentum, look how long the stock went up from 2018 all the way to 2024 in a really healthy uptick. And that's been, I guess, the gradient of trend or the most stable way this stock has shown price appreciation. And as it got accelerated and a bit more volatile, euphoric, if you will, the market snapped back and put it back into stability. And now we've come out of that, which is really interesting, coming out of that level. And so now we've ticked up again, some really nice volume coming through. I think this is the moment to start looking for opportunities for Technology One, because, boy, if the tech sector gets hot again, I can't see this one not performing.
No, I agree with you, because I think, some of these technology stocks like this was overbought, because that was sort of during the period where the US technology was going, and so Australians were getting on the bandwagon and buying Aussie tech stocks. And as we always know, is most of the people jump in towards the end of the run or near the peak. So I think that's what we saw. Now it's come back so hard. So to me right now is the time for opportunity. Now in a minute I'm going to ask you both what your favourite sector was that we talked about and your pick of the 4 stocks. I'm giving you a little bit of warning notice. So we've got one more stock to go through, Janine, at the moment.
All right, let's have a look at that. I'll say it's Chorus Limited, which, this has really been struggling to get through that resistance level just above about $8.30, $8.40. Spiked through it a couple of times, came back again, spiked through it. But all the while it's been maintaining this angle of the rise, which is quite beautiful. I mean, I love seeing this sort of pattern formation on charts. And when people first come to us and they start learning with us and they get up to module 5 and they say, oh, what's all of this fuss about patterns? Well, when you look at a chart like this, you could see what the fuss is, because this gives you really an inside look into, well, how can I trade this well, and thinking about patterns, because it's always consolidating and giving breakouts and consolidating and giving breakouts all the way up, even in these small sideways moves there. But right now we're coming to the point of it. It's coming to the pointy end of it. If it trades back below these lows here, well, then I just leave it and let it go. And this is where, people will read something, there'll be an announcement and it'll say, oh, look, there's been something happen with Chorus Limited. And someone says, oh, I've got to buy the stock. And then we look at the chart and we say, why do you have to buy it? There's no hurry. Nobody's pushing it up. If the big money was pushing up, then I could say, yep, match the story with what's physically happening, and then there's something in it. But at the moment, there's, they're coming to some sort of equilibrium at around $8. We want disequilibrium. We don't have it right now.
Okay, so sit on your hands and wait. Okay.
Yep.
All right. What was your favourite sector?
I'm going to pick industrials at this point, just to have something different. I know Phil's going to do tech.
Yeah.
Phil's on tech.
Yeah. I just think that, where oil's sitting and where tech's sitting is such an interesting spot.
I think I'm with you on the tech sector, but stocks. Phil, first.
T&E.
T&E?
Yeah, it is a bit riskier.
It is a bit, yeah.
It is a bit riskier, but where it's coming from, it looks like there's a lot of opportunity.
All right, Janine.
I can't remember.
Yeah, you can. Come on, put your reputation on the line.
Yeah, no, seriously. I was so looking at lots of these and thinking I like lots of them, and I'd probably look at some of the tech stocks in there. There's so many opportunities in there to rub your hands. Again, I'm not going to.
No, I want one. I've got 4. It's pretty easy to pick. We're not talking about ice cream flavours or chocolate.
I can't pick that one. Can I eliminate the ones I wouldn't pick then? Is that
eliminate the ones you won't pick.
Okay. Probably Dicker Data if it goes through that high there, but it would have to jump that hurdle and get through that high for me to.
I don't mind OR.
I set a high bar for it.
Yeah, I like Orica. But I don't mind Dicker Data either, but Orica I think is my favourite.
Your pick.
That's my pick. But anyway, moving on. Shortly we're going to get into our hot stock tip. But first, let's answer your questions. Now, Adam writes, I'm loving AL3 right now. The company is 3D printing parts for military operations. Recently gaining small contracts for the US Navy to 3D print parts for ships, and they are also in the UK market. Wondering what you think of the current chart and potential outlook for the company. I'm going to throw to you, Phil, on this one.
All right, let's have a look. I don't think we've covered this stock before, which is
I don't remember covering it, no.
Pretty exciting. All right, let's go and take a look, especially in light of where we are right now in the world. A stock with quite a bit of history. I mean, it's been around since 2020, and typical unfolding, IPO, initial euphoria, and then reality sets in. Nice little base out, and seems to be operating through some kind of expansion at the moment. So I like where this stock is moving. I think it's really right now a story of this key level at 14 cents, which the stock is holding up above. As long as it holds there, I really like the potential further upside. It is, though, finding a bit of resistance up through this level here, which is around that 25, 26 cents. So I guess more medium term, I think it's got to get through 25 with some strength before I give it the big tick to continue on into that 40 cent region. But right now, short term, it's doing all the right things. It's tested 14, it's coming back, pulling back a little. If it holds 19, 20 here and starts moving up again, I think there are some markers to say this short to medium term turnaround is on. So yeah, quite an interesting play. I think really honing in your risk reward is going to be key here. Is there enough opportunity in between these levels right now? Because that's what...
well, that's the question, isn't it?
Yeah.
Because he says he's loving it right now, and I'm assuming he's loving it right now because of the US contract and it's in the UK, but there was not a lot of detail about why he's loving it.
Yes.
And he's asking us for our technical view on the stock. So, but it's not necessarily that you can get into it on a good story like that. Is it going to follow through with that story, and then where do you get out and how do you protect your money? I'm assuming you've got some really good comments because you're looking at me with those wise eyes.
Yes, just a couple of things. One of them is if we go back and look at the chart, this whole thing here, when Phil marked these levels on here, straight away reminded me of a conversation with someone who said, when I did module 3 and I was learning, you've always said, you need rules to manage your risk and protect yourself, right? Yep. I can see there's a few rules there that you could use to manage and protect yourself there, which I won't go into exact detail right now. But what the point of this is that when they got to module 4, they had no, they didn't really understand that they were going to be able to tell how far a stock like this or any stock could rise as part of its unfolding. And that blew the minds of that person or those people that loved module 4, because I used to do a lot more work with helping people on a day-to-day basis. And hopefully I'll do more of that coming up, that, on a day-to-day basis, supporting them through that process and helping them to have those aha moments. And to me, this shows that, and Phil's already put lines on there. So, it's like a simple little thing that somebody would think, anybody looking at that chart would have no idea about it unless they're told to look at it. That's the funny thing about this. And so, you start to line things up and think, hey, this stock, even though it's a liquid and it's so volatile, it actually is working to a rhythm that I can measure. And I can put a measurement on where that run, when it gets going, is going to peter out. To me, that's the huge thing that adds another layer on top of having good rules.
I remember you don't remember, you're way too young, I think, but when I was working with you and teaching you all these levels and projections and stuff like that, I mean, she was like a kid in a lolly shop, mate, I tell you what. Yep. She kept hounding me for more stuff.
True.
And she was amazed at how it actually worked. And so was I when I first learned it. It was like, wow, like these do all these things. So it's about strength and direction. So it's just not about the story. It's about confirmation, like you were saying earlier. Has it confirmed it's going up? I don't think yet. It hasn't. So you don't just buy in the story. You need a trigger to get into it. But also you mentioned about, well, where do you get out of it, managing your money, which is also what you were talking about as well, is how far is it going to go? Where's your exit strategy? How are you going to manage it? So hopefully, but if you want to learn some of that sort of stuff, grab my book if you haven't got it already. The link's in the description below. But thank you for your comments on this stock, because it wasn't one I don't think we've ever covered before. So, and thank you for bringing that up too. Next email is from Paul, and he says, I want to get your thoughts on Bitcoin. It seems to be moving sideways at the moment. So do you see this as a potential breakout opportunity, or is it something investors should be cautious about right now? Now, before I think if we're going to bring the chart up anyway, but right now, without even looking at the chart, my go is that Bitcoin's still got further to fall. I think it's probably going to fall into maybe June or July, and I reckon it'll probably go 50,000 or below. That's just my take for last time I looked at it. Bitcoin is so, like, moving on from what you were talking about, Bitcoin is so regular, it's not funny. It's so easy to pick when you understand some basic rules around it. And I think I can close one eye and just put some points on the chart and it just follows it normally because it's very much a fear and greed type movement, and people just create the patterns that are just so easy for me to trade or for us to trade. That's it. I don't trade it because I don't really want to. But anyway, let's bring up the chart anyway.
Yeah, all right. So the chart of Bitcoin, it's really, again, sitting in such an interesting position. I mean, one of the big takeaways for Bitcoin, and like you said, it is so uniform in that generally when these market tops have come in for Bitcoin, it's been really obvious with the way volume has unfolded. Like we've seen really big volume come into the peak, really big volume come into those peaks, and then more recently through that peak there, we saw the top of volume come in. Now, where we're sitting in terms of the price action with Bitcoin is, to some degree, there is potential that we may find a little bit of support through here in the short term. But I mean, we've looked at Bitcoin for so long, and like you said, around that September time, October, I remember speaking to some media, Jasmine and the like, were getting some stuff out in terms of Bitcoin was likely to find a top in October and start falling, and it literally did that, because if you go and check back every 4 years, you see a top come through on Bitcoin. Now, we look today in terms of where we are, that following, if we go to the chart and have a good look, following that correction, really what Bitcoin's done is fall to 70 to 80%.
Correct.
We're not there yet.
We're near there.
And I remember saying, this could go down to 20 to 30,000, and I copped a bit of flack for that, but I still think that that's possible for Bitcoin.
I'm glad you joined the club.
Yeah.
I cop the flack when I keep saying that Bitcoin's going to fall or crash or whatever else. So I'm glad you're copping it for a change.
I am a little bit, but hey, right now it is falling, so it's respecting what we've been saying. And, just one look at how that momentum's come through. And if you're looking at Bitcoin somewhere along those levels, it's pretty easy to say, yep, 40 to 50,000 is definitely one of those markers. But if it does respect historical crashes of 70 to 80%, it could go down to 20,000.
Well, it's highly likely to. I know the chart, I showed the chart of Bitcoin and my analysis to this group in New Zealand, 3 weeks ago while I was doing it. It was 100% accurate.
Yeah.
So I said to the people, it's highly likely it's going to do this into June, roughly. So, I was showing them what we do actually can work. Obviously in June, if it does do what I've said it's going to do, they'll be all going, hey guys, I want to know more about this. And that happens quite a lot. But the thing is what you were talking about is direction and strength. How far is it going to go in rising, but also how far is it going to fall, which is exactly basically what Phil and I have been chatting about. And Bitcoin is so regular, but I think right now, not an opportunity. I think right now it is more likely the probability swung to more downside, and then probably around mid-year we might get some basing, and then might be the opportunity then to get into the stock. But and it sounds like you're sort of agreeing with that.
Yeah, I mean, any uptick here is probably short-term, but I think you raised an important point in terms of mentioning, what the charting, the power of it in terms of we're looking on the way up, on the way down. I just want to add one more thing, because I have been seeing a lot of comments in terms of people saying, I bought a stock based on what you guys said. What do I do now? When do I sell? And I think that is the most important thing this year.
Before you buy.
Yeah, and I think the biggest takeaway is if you are asking that question, you really do need to go and get educated, go visit the website, because unless you know how to sell, you've got no business getting involved in the market. I know it's a bit harsh, but selling is where the profit comes in. It's where it stays, and just being able to buy is one half of the equation. And although we do give as much as we can here, the full package is in the selling. So really know that.
Would you drive a car with no brakes?
No.
Yeah.
I don't even know why I thought about that. Of course I wouldn't.
No. Anyway, moving on. Gustav is next, and he writes, if the Straits of Hormuz is disrupted for a long period of time, which Asian economies are most exposed to the resulting oil price shock? And could Australia emerge as a relative beneficiary through its energy exports, despite the risk of weaker economic growth across Asia? I'm going to give this to Janine. I don't really care. And I'm not trying to be rude for the question. I just don't.
Well, we're not economists.
We're not economists, so.
And it doesn't matter in terms of buying and selling, I guess.
Yeah, which Asian economies are likely?
It's interesting.
It is an interesting question. I mean, obviously Singapore is the major exporter of fuel, being diesel, petrol, etc. Obviously Australia is a major exporter of gas, so we might benefit from the gas sort of side of things, but.
I guess right now, because of, with the Middle Eastern oil, the biggest buyers of that oil are China, Japan, and some of the European nations. And so do they then turn around and go, okay, Australia, let's have some of your stuff, potentially. We've seen Japan actually go over to the US and start doing deals and buying US oil. So is that the new path forward? I know Trump's been saying, guys, I'm open if you want to buy our oil, which is crazy with what is going on in the Middle East. But they're the options. The US has definite capacity to be able to fill this hole.
So do we, but it'll take a while to get some of the mines, the oil rigs and stuff like that off the ground.
I think they're more ready than us. So maybe the story is to go over to the US more so than us. But we have other, like coal and a whole bunch of other stuff that we can supply.
Yeah, but you also got to think of, in terms of Asian economies, how do they get their energy supply? Is it coal-fired? Is it gas-fired? Is it other type of energy? And obviously you've got, Malaysia and Indonesia, very good countries, big countries, but then you've got obviously India, China, all those other places, and some of them do have nuclear power.
Well, they're going
power
nuclear,
generation, but then obviously for manufacturing, China's the biggest manufacturing, an exporter on the planet. So where are they getting their, materials from, their energy supplies from, all that sort of stuff? But it's also got to get shipped in there. If there's no diesel, how do the ships get there? So yes, you were saying something, Janine?
Look, I wasn't going to add anything that was better than what you had said. However, what I do want to say is that you think about where all of that oil's going into, not just in fuel, but in manufacture of goods and things.
Plastics.
Plastics. Don't get me started on plastics.
Don't get me started on plastics either. Janine and I have had a big discussion on plastics because they tell you to get rid of, say, single-use plastics, from a shopping bag. Don't have shopping bags, so, at Coles and Woolworths, and then they charge you for it, but everything you bought in your trolley is plastic.
Yeah.
Every bottle,
right.
every container, everything is plastic, so you're buying lots of plastic, but you're told you're not allowed to have a half a cent little shopping bag. So, all right, now it's time for our hot stock of the week, and we're going to go for Phil for this, so you've got to beat Pedro.
I'm going to try. All right, let's get into our hot stock tip this week, which is Turaco Gold Limited. Now, I've picked the gold player because obviously gold's had another uptick in price. It's come off a nice correction. We've been following the gold story and thinking, okay, maybe the next opportunity is upon us. And what we're seeing with Turaco Gold, it's one of the smaller players, but really in a beautiful expansion type move right now. And it's broken through that key level at 50 cents for me. I mean, it found a lot of price agreements at 50, shot on through. You can see the way this trend is unfolding. Big base out, now in trend. And what's quite nice is we're expanding. As we're moving up, we're getting longer in price. I mean, the strongest move has been the most recent. So that's quite important right now that we are at that make or break point. We've seen sellers come in, start to test where this major buying was unfolding. So right now, I think in terms of future direction for TCG, this is crucial. We can't break below this level on the 27th of March. We've got to hold it. We've got to start rising from here. And there are some real markers to show that we are operating or supporting this momentum line on the way up. So as long as we hold that, hold above 50 cents, I think this one's got a real chance to take out and get to that dollar level. And as you know, Janine, once we start approaching $1, some of these smaller cap stocks start to get a bit of interest from that higher end, and that may spring the next big leg up for this one. But I just love the whole pattern, how it's unfolded, because if it can get through $1, it can really get it back to that 160 level, which is very exciting.
Well, once it goes through $1, Janine will start smiling.
She'll start maybe
I actually do like
pouring in
that
the big
stock.
cash.
I think
Look at that.
this is in the running against one of Pedro's. This might be your next drone shield.
Potentially, yeah. I mean,
That's big words.
yeah, it is.
Really
It's a big
statement,
call.
Janine, from Janine too.
But it's really like doing all the right things technically. I mean, even on the weekly chart, we are seeing the biggest volume or one of the biggest volume prints happen literally on this low through here. So we've ticked up, which again puts us in that conversation of, okay, it's time to go now.
I think you could be right because it is looking very, very special at the moment. So, but again, obviously with the hot stock tip, Phil's not saying buy right now. He's saying this is a potential, because what we like to do here is give you what's potentially going to happen so you get prepared for it, do your research, make sure you understand what you're investing in and that it does suit your portfolio style. If you don't know how to do that, just click the link below in the description to get a copy of my book. It'll help you understand the rules around getting in and getting out for that. But it is so important, as both Phil and Janine said tonight, you know, you need to know when to get in, you need to get when to get out. And if you are worried about the market at the moment, that's just a big sign that you need to learn a little bit more. But if you do want more from us, check out our video 8 ASX stocks to buy in Q2 for strong growth.